All right. All right, so let's talk about what's going on in the market right now, because it's actually really interesting into a pretty big event in the CPI PPI number, right? One coming out tomorrow, and then one the following day. I'm going to try not to get too confusing here because I can confuse myself with this crap. All right, but basically, we've been in a tight grind, right? Nothing too exciting as far as upside, but you could see they're not letting anything go too far away on the downside either. All right, and you guys are probably hearing and have been hearing that gamma for the S&P 500 is pretty low. Okay, and usually what that means. When gamma is low, again, it's not bullish or bearish. It opens up the window for some volatility, right? For some movement. Okay, so when gamma is elevated, you get that sticky price action, and when you have low gamma, usually it opens the window for some decent movement. Okay, but because of positioning in the S&P 500, right? You got some pinning action that really supersedes everything and actually plays into what's going on with gamma. But this picture, you guys have been seeing me, I've been throwing this out a lot for you Steamroom members so you can get an idea of what it means, right? What it means in the market as far as hedging when it comes to dealers, okay? So here's a chart, right? S&P 500, and what this is showing us is what dealers need to do to hedge delta, okay, in real time as the S&P 500 moves, okay? And again, I'm no gamma aficionado. I use it for one reason and one reason only, right? I look for squeezes when sentiment and gamma line up. And, you know, I'm more cautious when gamma is elevated, usually lines up with elevated sentiment as well. So I'm on alert for, you know, cautious for fades. All right. But usually what you'll see is a chart that looks almost the opposite of this, right? So it'll look like this. All right. And basically what that usually tells us, okay, is as the S&P 500 climbs in price, okay, gamma exposure will increase with it, okay? And you get, as gamma gets more elevated to the upside, right, dealers will buy the dip, sell the rip, and that's where you get that sticky price action, okay? But what we have now here, and you can see it's really interesting because you see it in the price action, okay? This is what dealers need to do, right? Coming into the day to hedge the S&P 500, hedge positions, all right? And you can see here, right? As the S&P 500 climbs in price, they need to sell to hedge their positions, okay? And as the S&P 500 comes in, right, goes lower from where we were at coming into the day, they're buying, right, down to pretty much 43.79. They have to get long S&P 500 exposure. Okay, so in simple English, right, just by looking at the direction of the graph and the numbers here, right, without getting too involved in the dynamics of all this, because it could make your head spin, it simply shows us that there is likely going to be that dealer support, right, into any weakness 43.79 and above, okay? But as the S&P 500 pushes higher and we get near that 4450 mark, okay, you're going to get dealers selling on the hedging side. Right? So what does that mean in price action? Right? With nothing in the dog days of summer, light volume, nothing much else going on, everybody waiting for the CPI, PPI. What does that tell us the price action should look like? Right? It tells us that dips should be bought, right? As long as this number holds, dips should be bought, okay? But avoid getting too excited thinking you're going to get this runaway rip ahead of the CPI, PPI, because you're going to get dealer hedging into strength. And unless there's some outside force, right, something that's going to overpower that, which is certainly possible, but there's nothing out there right now, okay? The likelihood is you get this choppy grind. All right. So, and what I've been, and I know it gets repetitive to a lot of members, but the reason why I post it and show it so often, because I know people can get easily confused. They can get tied up into an established bias they already have and try to look at this information and turn it into what they want it to be. All right. But that's why we've been focusing and talking about, all right, any dips, right? We spoke about this, I think, on the last Tuesday webinar. Oh, it was Thursday, on the last Thursday webinar, right? Which is open to everybody. Any dips that get closer to that 0 gamma level, that's where you want to look for tactical entries, right? And then you want to sell into the rips, okay? Especially ahead of the CPI, PPI, and we'll see what kind of effect that has. Could be probably to August expiration, but we want to be a little more careful the week of expiration anyway. All right. And this is all the reason why these dynamics are at play is based on S&P 500 positioning. And as far as I know, I had a chart, but I think it's 4,500 or is it 4,450? There's some huge position at play there that this is all getting pinned to. And I think it might be out of JP Morgan, the position there, if I'm not mistaken. Some ginormous position in SPX. All right. But again, we don't even need to confuse ourselves with the details. I know some of you actually may enjoy learning, right, and knowing the details. But if the more confused you're going to get, the worse it'll be. Right. So that's why we wanted to stick to that game plan and not get too excited. Like, I see, for example, this morning, right? And you can see in the heat of the moment, you had this nice rip off the open, okay? You had a nice rip off the open, and you could see the excitement out there that, oh shit, maybe this thing gets crazy today. And that's why I wanted to make the point, and I hate trying to talk people out of trades because that could always backfire, and that's never good, okay? But I wanted to make the point, listen, gamma is favorable in a buy the dip situation right now, okay? But it's not how we usually play gamma off a pullback. It's not where, okay, there's huge upside on a squeeze. That's not the case here. I mean, we don't even have a pullback here. This is into the highs. What this is, there's support. They're going to buy the dip, let bears get excited about some sell-off because it's not going to happen, right? And when bulls are getting excited and you're approaching, like, I don't know, where did we top out? 44.40, right? When you're getting into that 44.50, 4,500 area, that's a place where you want to put the guns back in the holster and calm down a bit. So you could see, knowing this stuff helps, even if you're not even pressing buttons, even if you decided to sit this one out and wait for the CPI, PPI, and see what happens there, But dips, the beauty of this setup is that any fades, you can look for entries. That's the beauty of a setup like this. Okay, it sucks that you can't, leave a long leash for upside, but it's a good feeling to know that there's that extra little something there to support the market off pullbacks and dips. All right, and if we had sentiment lined up with it, there goes that. If we had sentiment lined up with it, that's where we can get really aggressive into any fades or pullbacks. You know what I mean? We could even look to be early in a sense if we had that. But we didn't. So, it is what it is. And we go into tomorrow with some widely watched economic numbers, inflationary numbers, right? And who knows how this plays out. I think what we saw in the market the last couple of days, okay, is simply, and there's rotation under the hood. We're talking about the S&P 500. Okay, you look under the hood in individual names, you got a whole different universe going on, right? And you have this whole growth, value, cyclical, defensive rotation going on, right? It's easy to just talk about the S&P 500, but unless you're just trading the ES, it really doesn't matter, okay? Because there's a whole larger thing going on that you really need to keep tabs on underneath the hood, okay? And what happened was, if you guys remember, rates have been melting away against what everybody was positioned and thinking, right? And finally hit a low, and with the addition of some strong job numbers, okay, you've had a rally in yields, right? So rates on the 10-year treasury on yields across the board have gone up. Bonds down, yields up. Okay? And this is what everybody was looking for out of here. Okay? Stronger signs of an economy, right? We had some strong job numbers that helped propel this move. Okay? So now what they've been pricing in based off those strong job numbers late last week, okay, they're looking for hotter inflationary numbers over the next couple of days. China came out with numbers Sunday. They were hot. So they're looking for hotter numbers out of the CPI, PPI on the next couple of days. Okay. So what that ultimately means is that the Fed more than likely will have to get the taper in motion, right? That's the thinking right now. So that's why today you had continuation, yields up, a lot of these infrastructure steel names, metals like FCX, commodity related names, Alcoa, all these names, Caterpillar, the cyclical names that haven't been acting well while rates were going south, have all firmed up here going into these numbers tomorrow. All right. So now we're looking forward, right? If we get a hot CPI, which is the consensus, everybody's expecting hotter inflationary numbers tomorrow, right? China released their Sunday, they're hot, everybody's hot, right? We get hot CPI, PPI numbers, and the likelihood is rates should continue to push higher. And the question becomes, what happens to tech and a lot of these growth high multiple plays that have actually been doing well while rates have been going higher, right? We've been talking about that group. The group that people were caught off sides not owning, and little by little have been moving some money over. What happens there? How hard do they sell them? So I think no matter what, we have something to look for, forward to, for clues for off tomorrow, whether the number's hot or not, it doesn't matter. Okay, for me, if tech and these growth names get hit off a high inflation reading, okay, if we see sweeper activity come into that selling, that can set up a decent trade. Okay, a lot of these names, they've had killer moves. They've needed to breathe, right? A lot of them were extended and could use some consolidation. And some of them have over the last couple of days now, as rates have been pushing higher. Some of those names have calmed down. Okay, if there is some selling early tomorrow off, what's coming out tomorrow? The PPI or the CPI? The PPI, whatever it is. CPI, I think, comes first. CPI, right? If the CPI is hotter than expected tomorrow and they sell tech, everyone's going to be looking for those higher rate plays, right? Everybody. That's the common logic out there. But the opportunity may be into weakness, buying up some of those tech and growth names that are seen selling. And I think the good thing is, and you've heard me chirp about this quite a few times the past couple of days this week, flow has shown some decent signs of cleaning up. All right, we were in the heart of earnings season. Doesn't get much worse for flow during that environment. You can't make heads or tails out of anything. For me, flow has cleaned up. I don't want to make a big deal out of it. It's not incredible, but noticeable. Without a doubt, it's been noticeable. And I'm looking forward to that, because if we do see some buying in these tech names, a lot of these names reported earnings already. This action will be clean buying, and that will be a good sign. All right. But, unfortunately, going in, there really is no mindset. You really don't want to build any, too much of a bias going into the next couple of days. Because if you remember what we've been talking about, okay, here's growth and tech, and here's, cyclicals and all the commodity and higher rate plays, okay? Everybody and their mother was on this side, long of this side, 2 months ago. I think it's 2 months already, is it that crazy? But 2 months ago, okay? Over the past month and a half, we've seen, not aggressively, but gradually money start to come out of those groups, and little by little going into some of the growth and defensive growth areas. Okay, it hasn't been aggressive, but we've seen money rotate in the other direction. Okay, not where we wanted it, right? We wanted it to come all the way over here, because then we got this all set up again, right? Then we can buy this off any weakness, because there shouldn't be much selling if nobody owns it. But that hasn't been the case, okay? The rotation has been gradual. We've been talking about stubborn bulls, okay? So they shook out some long money. All right, so unfortunately, though, that doesn't really paint a great setup for us, because it can go either way. It could go either way here. It can go either way. So that's part of the problem we have right now going in. We need more information, more time to really make a judgment call. There's just no signal out there. right? We spoke about this on Sunday. There's no signal out there. And, the other thing too is what I also was hoping for. I was hoping for a little bit of selling and hedging these past couple days, worrying that a hot CPI number would get the Fed to taper quicker. I was hoping that the market would come in a little bit, but more importantly, there'd be some protection, some index put buying, at least some hedging going on, so that can, once it's over, you get the unwind of that hedging that can push prices higher, squeeze, right? We didn't get that either. So we've sort of just been hanging around here in no man's land, without not much of an edge out there, as far as which scenario might play out. Okay, the only thing I think we have out there is that what I was saying earlier. Okay. Now, again, this is the information we have in front of us now. It can change. But I think right now, this is our biggest edge, where the likelihood, you need something. This market would need I won't say an exogenous event, but would need something really healthy enough to push this through gamma neutral and get gamma to work in a bearish way. You know what I'm saying? Like what we have out there right now, there's no offsides positioning in VIX. There's nothing powerful enough in my opinion, a lot of people opinion who follow this, to get that selling to have negative gamma work in a bearish way. So the likelihood is you're going to get buying here. All right, buy the dip is still in the works. More than likely up until the August expiration. We spoke about this. Okay, and then why the August expiration? Because you'll have these positions roll off. So what's almost like a magnet holding the market together will be gone by August. You know what I mean? Does that make sense? Trust me, I don't enjoy talking about this shit too much, in detail, because I can make myself nuts. Hold on a second. What happened to my damn chair? But does it make sense? Anybody have any questions on this? Oh, I gotta open this up to see if anybody has any questions. Yeah, but I agree, Cal. I agree. This has nothing to do with the Fed, the end game. I don't see an end game either. But you gotta understand, once this market shouldn't be afraid of tapering. I don't think tapering is enough to bring this market down. Tapering and tightening and raising rates are two different things. Okay? Tapering, the market's known to throw these little tantrums from time to time. But those tantrums, the difference is you buy those tantrums. Those tantrums have been great entries. It's when the Fed attempts to raise rates and tighten that things can get really dicey. So I'm not even talking on on a macro level here. I'm not even talking about what the Fed is going to end up doing or not. I don't think they even know. So I'm not going to try to predict it. So I'm just trying to deal with the stuff we know and we have in front of us right now. You got a widely watched inflationary number tomorrow, and we want to know how players are positioned and set up going into it. Because players are offside going into something like that, there could be a significant outcome no matter what happens. We just seen that with rates. Everybody positioned on one side for the reopening, for an increase in rates, right? And the total opposite happened. And because of how people were positioned, you had moves magnified out there, sets up incredible opportunities. So that's all I'm concerned about. I follow the macro side and all that stuff, but that never makes me money in this game. I'm not gonna lie to you. That stuff doesn't make you money. We talk about this all the time. You got the smartest guys in the world out there trying to figure this out, and they can't. Like you're gonna outthink and a Muhammad Al-Arian. You know what I mean? Like, don't even kid yourself. Don't even kid yourself. Yeah, you just deal with what you can handle. And now these days we have a lot more information at our fingertips than we used to. So we have access to stuff that can provide an edge, and trying to figure out the macro side of things is, even if you figure out, it's impossible. As you see, these guys end up a lot of times they get it right, and doesn't mean the market went in the direction they thought it would. So that's the problem. That's the problem. All right. So that's the story on the gamma side, right? On the positioning side here, we saw some nice action today in these reflationary reopening names. Oh, he took the pin off. So these type of names here. Don't worry about it. Don't worry about it. I knew you had to pin that anyway. So, but look at this guy. Like, we've had some recent action in these names. It hasn't been, like we were talking about, it hasn't been all these names. It's been very selective pockets, right? So like this new core caught some good looking activity. I day traded off the first action. I day traded again today. I think some of you bought it. I don't know if you're still in it. This one too caught action, Steel Dynamics. But these have been some of the plays that in the midst of this ugly flow caught some decent action. But it hasn't been, the whole entire group like they usually do. I mean, today, X caught some action, more of them today. FCX caught a little bit of action. But, the two big ones were STLD and Nucor. And again, today, Nucor got that too today, right off the open. You flipped which one, Joe? Like stir fry. X? Oh, Nucor. Yeah. I tell you, I'm not going to lie to you. I was pretty pissed off this morning because this thing had some move. God forbid you would have just turned your head away from the screen for a little bit. This thing had a killer move in the morning. Do I trail stops? Not as much as I should, Dan. Not as much as I should. You know what I mean? Oop. But the right way to do it is, if you like a name, to trail stops. That's my problem. I don't have a specific exit criteria. Because of my plan going into the last couple of days, because of the backdrop, because of what we've been talking about, and the setup in markets, I just came to the conclusion that I'm going to be quick on everything. So I get a pop, I'm selling it. So sometimes it works, sometimes it costs me like it did today on this new core. But this was too easy, and when you see something too easy like this, and by accident you could have made some more money, it pisses you off, But anyway, Yeah, you had these EV names. I'm not crazy about them. You know, they've been catching action with the infrastructure and stuff like that. Yeah, Ani, that's the best way. Like if you stick to a plan, so at least it'll even out on both sides. All right. Some you'll be frustrated and pissed off you sold early, and then it'll allow you, a certain system will allow you to hold on to some. Goldman Sachs, yeah, these financials too. They've been strong too, right? Jesus, Goldman Sachs. Oh, that's what I wanted to show you guys too. Hold on a second. Something did come out today that was interesting. Bigger picture. Look at this while I get it. This is the Goldman sentiment rundown we look at. Hold on, let me post this while you're looking at that. I'm going to repost this later so you guys can see it. All right. So this, by the way, nothing really, there's some improvement here. That's the weird thing about sentiment these days is that the market is at higher levels, but because of the noise around us, with the COVID variant, Delta variant, China and everything else, you have sentiment actually improving, even though the market's at new highs. So one of those rare events where you get that type of reaction. I want to show you guys this. Okay. So this here is bigger picture stuff. Okay. This is fund positioning. Okay. Over the course of years. Right. So this is as big picture as you're going to get it. All right. And it's worth paying attention to these things because all the little rotations and all the little setups in between, are great to trade tactically. But, having that backdrop, knowing where money is, right? What side it's on, bigger picture wise, that's where a lot of the larger moves, right? The larger trends happen. All right. And this is kind of what we talk about. You have this growth versus value trade, okay, where it got overdone. Everybody playing for the reopening, okay, overdone over an intermediate term basis. But if you think about it, like value's been neglected for ages, right? Ages. So like this will give you more perspective on how the funds are positioned for the longer term trends, right? So you have like, I'll give you an example. Look at this. All right. So this is longer term. Like financials have been so neglected over the years, right? They, hedge funds, even though they may have bought them recently and got long financials based on higher rates and so forth, they still have record low exposure on a longer term basis compared to other groups. The most overweight sector for long only in hedge funds, communication services, right? That's been the hot group over how many years? A long time now. But look, I'm going to post the rest of this when I get through it. This just came out. Comes out like once a month. So, active funds are more overweight Amazon than a year ago. Here, relative positioning. Look at this here. Relative positioning in financial sector plummeted to all-time lows despite the sector's big outperformance. So in comparison to other groups, right? This is 2012, so a decade ago. Exactly, a decade. Exactly. So this is pretty cool, that RRG graph, like, you know what I mean? Showing you where everything is. You know, and that's why a lot of, you know, you got a lot of intelligent people out there who like these reopening value plays, right? That's why they're so bullish of them, because they've been so underowned for such a long time. You just had it overdone on a shorter term time horizon. You know what I mean? It got extended. People got too excited on shorter term time frames, and it needed to pause. So this is what it looks like here, right? You got commercial services up here, the most long sector, utilities down here, energy, financials all underweight, industrials, materials. So again, this is more of a big picture stuff. And I know you guys like to look at what these guys are doing. Hedge fund positioning. Oh, I can't blow that up. So hedge fund positioning here. Real estate saw the biggest sell-off by hedge fund managers in the recent 3 months. So this is what hedge funds have been doing, guys. 3 months, okay? In comparison to 3 months ago, exposure. Selling real estate, healthcare, tech, energy, consumer staples, financials, they sold. And what they've been adding to commercial services, consumer discretionary, utilities, industrials, materials. So this is just hedge funds. Here, this is cool. Net relative sector exposure, hedge funds versus history. Versus the history. Okay? So, I mean, you know what I mean? Big picture stuff. Financials, look. Even tech, surprisingly, right? These hedge funds, boy. So financials by far, no, I don't know if we're smart. You know, they're smart people. They're not dumb people. They get too cute, I think, Martin. You know what I mean? So this is interesting. Hedge fund cyclical position went back to underweight relative to defensives, although picked up 9 points from last month's levels. Wow. Hedge fund cyclical versus defensive positioning. This is just hedge funds again. So they went underweight cyclicals and picked up, you know, what we were talking about. They rotated the other way, you know. They always, that's the thing, they're always late to the party. That's what I think their problem is, because they're chasing performance. You know, it's not easy when you got to prove yourself to keep your money. You know what I mean? That's that forced buying. So check this out. This is on private Twitter. I'll throw it in the room. And I'm going to look over it myself if I see anything. This just came out, so I'm just looking at it. One more thing I wanted to show you guys. Let me see if the new one's out. Hold on. Because I know a lot of you guys are looking at this here and like, you're probably saying, what the hell is he showing us? Big picture shit? I'm lucky I can hold the stock 2 days. He's showing me big picture shit? I know what you guys are thinking. Hold on. All right. Oof, that's an awful screenshot, but it'll do. I wanted to get the updated one. It didn't come out yet. All right, so this was going into today. And I think a lot of you get more use out of this than this big picture stuff on a shorter term basis. Here's what we look like sector-wise. 2 days are like a year. You're right, especially in this market, boy. So again, we're kind of in no man's land here, guys. You know, we're kind of in no man's land, right? This was the trade, like You know what I mean? Just even tactically, if you were looking at these groups, they were oversold. That was, where to pick your spots. But, now we have nothing. Tech cooled off because they've been rotating back into some of the cyclicals. The semis in no man's land. So, again, not bearish, but it's just there's no edge, right? That's what I mean. There's no edge, right? If you liked any of these groups, even for a trade, you had an edge there. You had some sentiment support where they should bounce. Now they're crossing through neutral here. This is not even including today's. So you go into tomorrow, probably even less bullish, if that makes any sense. Right? Anybody see anything that I'm missing? No, right? So that's what I mean. The reaction can go any way and make sense off these numbers. Anyway. I think the opportunity is what they sell. I really do. Whatever they sell. Hell, even if they sell the overall market, that's probably where the opportunity is. Anybody have any questions on anything maybe I didn't speak about? Or, I wish I had something a little more exciting for you guys as far as the setup. I thought there would be a shot of it, coming into this week, if things went the right way here Monday, Tuesday, but nothing really materialized. Small caps are a mystery to me. I don't know what you would be rooting for. I don't know what you need to get small caps higher. Like a lot of people that I talk to are telling me that you would need higher rates. That's what they're telling me. Okay. I don't know if that's true, but that's what a lot of people are telling me, that if rates bottom, they don't even have to scream higher, but just bottom and gradually go higher, you could possibly get a breakout in all the small caps the second half of the year. So I think, at this point now, if you have the time, I think it's a timing thing. That's the problem. But you got a decent risk reward here now out of this small cap camp. The risk was getting stuck in something like this, or, a healthy pull because you had a ridiculous ramp. You're at the point now where this has consolidated enough that if you allow yourself enough time, right? We spoke about this. If you can give yourself to that January, February time, the risk is worth it. Yeah, nice sweep today in IWM. You're right. December's. Can you please put the info you just went over on Twitter? No, I'll get kicked off Twitter. They kicked me off already. They're still busting my chops. They're still busting my chops for stuff I posted 2 years ago. They're still busting my chops 2 years ago. And everybody and their mother was posting this stuff. Yeah, it's ridiculous. They're trying to make an example out of me or something. People still post it. You know what I mean? Otherwise, Jim, I would. I post it all the time. But they'll put me in cuffs. Yeah, they're coming after me. I don't know. What the hell did I do? I mind my business. I don't bother anybody. Yeah, they're nuts. They got nothing better to do. You got people, you got terrorist organizations recruiting people on Twitter, and they're worrying about me posting brokerage firm shit. Get the hell out of here. Right? Crazy. They don't know what they're doing. They got their priorities backwards. But yeah, IWM does look really interesting. Does look really interesting. So this is what the sweep that Speed was talking about today. And you got a decent short position too. You got a healthy short position, right? In IWM. So this was the sweep. This is a good looking sweep. But you guys don't remember, like when we used to see like quality ETF sweeper activity, we haven't been able to really get a gauge or have an edge off ETF action because these markets, we haven't had a 5% correction since Kennedy got shot. You know what I mean? So it's like everybody's rolling. Everybody's rolling existing positions, just keep rolling and rolling and rolling. But, you know, like IWM, they used to come after it pretty aggressively, and it was a nice, you get a nice trade out of it when they hit it hard, you know. But, you know, they would hit this, like this, they would hit this line and tattoo it throughout the day. You know, maybe they will, we'll see. But this was a good looking sweep, yeah. This was a good looking order. Who's with me where? Who's with me where? Guy sneezing. I don't have anybody sneezing. Sneezing and giggling. Somebody's mic's on. They probably don't even know. It's not on my end. Somebody has their audio on. Jules. No, that's not on my end. Thanks for the heads up, though, Sherry. Oh, it was you. Who is that? Oh, that's not me writing. It says Wall Street Jesus. Who's that, Matt or Norse? That's not me writing. Yeah, you logged in as me. Oh, that's why, Matt. Hey, God. Let me show you guys another thing before we go here. Oh, here's the IWM. Is this it? Yeah. This is the IWM short position. So it came in a little bit here. Last couple of weeks. But still, you know, I mean, compared to like the S&P 500, compared to the Qs, you know, the Qs, look at the Qs. Look at this. You got nothing to squeeze. You know, look at this. Here, this was nice. This is, again, this is, you know, this was the start of that setup in the Qs. What was I going at? Oh, here. There were a couple decent looking bets out there today. A couple had earnings, but watch. You'll see here. Look. Here's the new core action. Like, this is what we were talking about in the morning. They just came in and chewed this all up. Look at this. By the way, do you realize Nucor? You know what they're trading at? Forward PE right now? Take a guess. Close, Dan. 4 times earnings. Right, almost 5. Is that nuts? Is that nuts? You know, and listen, back before February, nobody gave a rat's ass, right? Nobody looked at PE and earnings and all that stuff. It was all speculative hype. Now it matters. Now it matters. Yeah, Nucor's the stud of the steel names, without a doubt. And STLD. Don't sleep on that one either. STLD. X is the disaster of the bunch, but STLD too. STLD too. Yeah, they look identical, right? They look identical. So that's the new. Where am I? Oh, that's the new core. Here's one of the CLF orders. Quote a couple of these things dated Jan 30s. I know quite a few of you like this stock, right? CLF. Where's I think Cal likes it, right? Who's the one who likes this name? I keep talking about it. There's a couple of you. Like this stock hardly even dipped. Came right back. What's the weekly look like here? Jeez. Look at this. Yep. A couple of these key names they stick with, these key metal names. Snap caught an opening bet. I don't know if this rolls or not for sure, because you had a lot of action off of that earnings. But this is a nice looking sweep. September 3rd, 82 call, Snap. That's in a little breather here off that gap up off earnings. Plan, this is an earnings bet, but that was a nice sweep too. September 55. Plan has earnings at the end of the month, 8/31. It's a shame too, because it was into some weakness today. And not at new highs. You got some upside. What else we got? There's a little biotech they were buying post earnings, ATHX. I don't know much about it at all. All I know is they had earnings. What is this thing? Jesus. Visa caught a ton of action today. Now, the thing with Visa, you had Visa and MasterCard. There's been big size in this name for a while now, and they just keep rolling them out. You know what I mean? So you got quite a few big positions, August calls that are going to expire next week. So more than likely, this type of size that came in today, I think it was like 10 million bucks worth, is replacing some of that exposure. But Visa looks great. You had one decent opportunity in Visa. I can't even make it out on the chart anymore. Can you believe it? When did Visa catch that bad news and sweepers came into that? Do you guys remember when that was? Was that here? Remember there was bad negative news? What was the news? I forgot what the news was. But there was some selling. Yeah, investigation, something like that. Yep. When was that? Do you remember, Mike? I can't even, it had to be this, maybe this. It had to be. That's the only, unless it was here. But anyway, late March. All right, so that's this here, yeah. Thanks, Joe. So that's exactly that. Wow. They bought that right up. Yeah, so anyway, if you remember, even then, from that point on, there was some size buying in Visa. MasterCard too. MasterCard's been lagging a bit, I think. Let me see. Yeah, MasterCard's a little choppier, right? MasterCard too, there's some big positions that they keep rolling out in time. What else? FL, this is an earnings bet. 820. Wait, does it catch earnings? I think so, right? August expiration is August what? Next Friday? Yeah, but what's the date then? Oh, so it is. It catches it by the day. Wow. So it catches it right by the day. And there's a big sweep. Foot Locker. Not a bad spot either. Look, Niner. Yeah, retail. There was some nice retail flow out there again today. Under Armour's been catching flow. Wow. I didn't realize how hot this thing got. Damn. Yep. Shopping? I don't know. I can't remember the last time I've been to a Foot Locker. You got me. Oh, what are Nike Air Jordans? What am I getting? Is that what they're still buying over there? They go nuts with those sneakers. People lose their minds. And this is another big bet that I'm not too sure of. Marriott. You know, it would help. Like, you see the way they bought, and Joey knows what I'm talking about. You see the way they bought Nucor this morning? You know what I mean? Like, there's no doubt when they buy, there's no doubt in your mind when they're buying it like that, what the hell they're trying to do, you know? But when they come in with just one order and you don't see anything around it ever again, you know, especially that close to expiration and earnings season, you don't know what the hell's going on. Yeah, like Nucor, right? You saw one order, or maybe you weren't sure. All of a sudden, boom again, boom again, boom again. You know what the hell's going on. You know, so that's what I would like to see with some of these orders like this on names off these pullbacks, not just these one big order and gone. Yeah, Square is fine though. I mean, Square, Jesus, Square's been on the top bet list for like 2 straight weeks. Look at this. This thing's a beast. Look at it. That looks good, Square. They came out of these things today a little bit. You know, they were selling these things to buy the Nucors of the world. PayPal down. Oh, PayPal's been selling off here. Crocs. They're still going higher, this Crocs. But yeah, that's the issue with Square. It could breathe here a little bit. You know, it's had a nice rally. You want them to break up the Niner too, potentially. Yeah, Take Two look clean. Take Two look clean yesterday. You know, that's a much better spot. Take Two. I think earnings are done, right? With everybody in the group, I think. But yeah, you know, if you like the name already, that order is worth firing off of. If you don't, you know, wait to see if they hit it again, you know? Wait to see if they hit it again. ATVI, they're buying Febs. They started buying that ahead of earnings, and there was a little more action. ATVI too looks decent off this poll. Goldman Sachs, yeah, I didn't play that at all. That's been a hot name. Oh, you know what else I forgot to put to look at? You got some of these other underbelly growth names that cause some action into weakness. 4. Path, yeah, Path still looks good. Hasn't done anything. This one looks good. S. Yeah, that's a monster. BLK. That's a monster. And yeah, earnings plan. You know what? I mean, we haven't even talked about biotech and pharma, which they've been annihilating. I mean, Pfizer, I can't even explain to you. This Pfizer every day. Like, okay, I get Moderna, but Moderna's been catching flow for God knows how long now. But Pfizer, I mean, you're talking about annihilating this thing. Annihilating. Yeah, I looked at that, Steven. I looked at that, right? That's XBI is the smaller cap, right? More speculative. And IBB is the quality, correct? That tells you everything you need to know right now, what's been going on in the market. Look at IBB and look at XBI. Look at that. Yeah, IBB, you got the bigger names, right? The more quality names. XBI is more of the speculative stuff. But look at that. That's a big difference. I don't remember seeing that big of a difference before like that. Yeah, big difference. But, it's exactly what we've been seeing in the market. They're going to those bigger, high quality names. The underbelly's been struggling. Yeah. The underbelly's been struggling. Like the bigger tech names, right? Like, look at ADSK. This thing hasn't gone down off that sweep. Look at this. It hasn't gone down. Amazing. Niners and everything. They're just, right now, it's not even that they've been out of favor. It's just the risk appetite for spec has been totally drained out of this market. Totally drained. So honestly, I don't think selling comes into play here. Like, I think this thing holds its own and the names hold their own, but just right now, there's just no interest in these things. There's no interest. There'll be interest one day and there's no follow through. You don't see them come back for ages. Intuit, that's a big guy, right? Oh my God. All the big guys. All the big guys. But yeah, that's the problem. I mean, me personally, I would like off dips. I think if you like, the Kathy play, that's where you look. You got to be careful chasing these names on up days, because there's not enough interest. We see it across the board in a lot of these underbelly names. Yeah, it's those mega cap names, mega caps. Walmart, that looks good too. Walmart, look at this. Right, the Home Depots of the world, Costco. What's Costco doing? Oh my God. Oh my God. But listen, we say that now, right? And look what these stocks look like. So that's what I'm saying. Like the small caps and all that could be a second half thing. If not, maybe late year into early next year. And I think growth and small caps come back into play. Just type in TD, Todd, and a whole bunch of them will come up. You look at these names. I mean, this is fried now. You know what I mean? Like, this is bonkers. That's volume profile. Ooh, I got stuck on this chart. What happened? My chart's stuck. Like these names right now, what are you going to do with them? Yeah, you're playing, you're scalping off Momo. Like whoever brought that up, these are the names that you want to try to catch when they're ready to go. But, from the information we have right now, in front of us, they're not ready yet. They're not ready yet. And you guys see what's been going on in this market. Anything speculative, they took out in the yard and gave it a beating. But like Bitcoin found the bottom, right? Started to firm up a bit. Little by little, you might start to see these things bottom out and firm up. It's not going to be slingshot back. But, that's what I'm saying. We're interested in these names. We got to watch them when they're out of favor, and they're catching some sweeper activity. Like MGNI, like, you know what I mean? That thing, that would have been a rocket off that sweeper activity if it was ready. These things, it just ran out of juice so quick, all of them. But I mean, guys, it's tough. It's not easy out there. It's tough. I mean, we're breaking records. We haven't had a 5% pullback in God knows how long now. Even that's, a 5% reset is healthy. The buying that comes out of that. What? Really? Damn. That long? Oh my God. Pre-election. Yeah. October 2021, that is, right? Exactly. That was the last quality setup we had. You know that, Dan? We talk about it all the time, right? That was the last decent setup we had. Yeah. It sucks, man. Yeah, any mini bubble, any sign of euphoria, they found a way to prick that bubble. Dan, for me to get aggressive again, like to me to get excited about swing trading again, I got to see that at least. You know what I mean? I got to see that at least. Yeah, I got to see a legitimate little reset at the least. John, I haven't, that's what Dan's saying. I've been patient for that. I've been patient for that. Like this was the last like good setup we had. You know what I mean? The sweeper activity and the winners that came out of this, that was a nice stretch. But you guys know, since like March, I haven't, it's been all tactical quick trades for me. Yeah, John, we got to try to grind it out and be patient. You know what I mean? I know. And Aisha, everybody's looking for it. We're not going to get it, right? Everybody wants to pull. That's part of the problem. But you're right. You need some sort of a blow off where you reel everybody in and they give up on it. Well, what are you going to do? What are you going to do? And the thing is, guys, like, it's one thing to say, okay, I'm waiting for a pullback to get aggressive again. I don't have the conviction to get aggressive. Like, where am I getting aggressive? And you know what I mean? And what? The closest that I came to really stepping on a gas pedal and buying stuff was this recent tech rotation. And it wasn't even on the option side. It was more equity so I could protect my downside. So I didn't have full conviction. But I cannot be aggressive in names that look like this. There's no, I can't. So what? I'm gonna go be aggressive in a name like this, even though it's not gonna go anywhere. So that's the problem. But yeah, to answer your question, if we get it doesn't even have to be a pullback percentage wise. It's got to be time. You understand? It's got to correct through time more than anything else. So like the pre-election poll wasn't anything ginormous, but you see this? This is what I'm talking about. Yeah, this, then everybody thought, okay, it's over. And then that did it. This did it right here. It wasn't done here. This did it. Because it reeled everybody in here and then caught them. Right? So everybody thought we would just go into new lows. And then boop. And it caught everybody offside, not owning anything. And then that's where you get this chase. So, this is all I need. If the right things happen. I tell you, not what we're seeing now, Dan. This doesn't, what's going on now, like I was saying, this doesn't cause it. You have sentiment improving right now, for Christ's sake. You have the market at new highs and sentiment improving. There's money to be made there too, but you got to be patient and have them line up the right way. Like right now is not the time. Like I spoke about it earlier, it could go either way here. It could go either way here. Like it can go, any scenario can play out here, even to the point that it could turn out to be what Aisha's talking about. And you get a Goldilocks situation where everything rallies. And then that could be the last stage. You know what I mean? That could even pan out here. Where interest rates sort of slowly grind higher and people would still want to own growth and they're going to own cyclicals and you get everything rally for a month. Certainly possible. So you got there's any scenario that can play out here over the next month, and it wouldn't shock me one bit. That's the problem. That's the problem. Where, 2 months ago, it wasn't the whole market, but you had NASDAQ and tech names so under-owned and so hated that it would have shocked me for these things to continue to be out of favor like they were. You know what I mean? Like now, because of this, it's, obviously not the same here. So now it could go any different, any direction, any scenario could play out. Any scenario. Any scenario. You got, and the other thing you got right now, okay, you got players out there, okay, you hear euphoria, this, that. You got players still using SPX for puts to hedge. Okay. They don't do that into tops. Okay. Into tops, they sell SPX puts naked. That's how confident they are. They're not buying puts. Everybody and their mother right now, what they're doing, they're buying names they like, and they're buying SPX puts to hedge. Right? That's the bullish thesis out there right now. Yeah, everybody's hedged up. So that's why a lot of people, right, like the Gamma Gang, don't think that this market can fall much. You got everybody all lathered up in SPX protection. How about the VIX positioning we look at every week? You don't see that into highs. Players buying VIX, getting long VIX. Exactly, Alex. That's what everybody's doing. That's the right move right now. But, when the market falls apart, you rarely are going to hear that everybody was hedged for it. Right? The reason why the market falls apart is because players are caught off sides significantly. Right? So what they do is they sell naked puts because they think the market can't fall. And then when it starts to fall, all that positioning gets caught. Right? All that VIX shorts, all that shorting in VIX, they get caught. And that's what adds fuel to the fire. We have the total opposite right now. The market getting smarter? You mean people getting smarter? I don't think so. Because you know what it is, John? They're not making money. They're not making money. Okay? They're losing their money on their SPX puts. And the names they're buying because of rotation aren't going higher. So it's not like everybody's making money. The market's frustrating everybody. Oh, Dan asked that. My bad. But here's an example. Ready? You like MGNI. So you buy MGNI and you buy QQQ puts to hedge over the last month. What happened? Okay. Or you're convinced the reopening trade is the place to be, right? You buy Caterpillar. And then you buy some SPX puts to hedge. Okay. That's where it would have been. You want to smash a screen? No. SPX has been going up every day and Caterpillar went south. So don't let anybody fool you. There's nobody printing money out there. Yeah, you could get lucky. You catch the right name, but you're still losing money on your puts. It gets to a point where people say, you know what? I'm not buying that effing protection anymore. It's a waste of money. That's euphoria, right? That's exuberance. Where people don't want to waste the money for protection. It's a waste. Or they want to short VIX because it's easy money, not get long VIX. So that's part of the problem. Why we don't fall? You want to know why? Those are the reasons. Yeah, Moshe. So when you get to the point where you say, that's it, I'm going long and I'm not buying protection because it's a waste of money, right? When people have that mentality, that's probably when it's game over. Those are the people that are making money, what Daniel just said. The people who have been sitting off prior quality entries. You understand? That's a big difference, right? We spoke about that on the Sunday webinar. Okay? If you got long off bullish sentiment here and you're sitting on those long positions, that's beautiful. That's fine. But that's a big difference than getting long new positions here. You understand? So even though it's not bearish, it's not bullish up here. But like Dan said, the people who are long off prior entries are the ones that are benefiting from this tape. And the likelihood is, and that's what I try to tell you guys, the likelihood is no matter what, I shouldn't say no matter what, but predominantly anything you bought off bullish sentiment, you'd be up on. Even with the rotation and everything else that's going on out there. But from this point on, you're probably more likely to be down than up on anything you bought. You know, so if you're looking, if you want a new long entry, at the least, you're waiting for something like this. At the least. You know what I mean? At the least. Like, you guys don't realize. Think about some of those tech names that you played, that we were playing off sweeper activity, off the bullish sentiment. Think about any of those names and look at where they are now. Even off the highs, look at where they are now. You know, so it's worth waiting for that. It's worth waiting for that. They don't last long, right? They come and go in a day, but it's worth waiting for it. Well, that's what, if we grind up into the August expiration, that's what a lot of people are going to be looking for. Something like this coming out of the August expiration. But try to hold a short through this. You'll have no hair left on your head. Well, yeah, that's where you got to be careful of the week of expiration, because they might front run it, Mike. You're right. They could front run it. If this market pushes higher, you know, you got to be careful midweek, especially at the latest. So, but we'll see. As of now, with the information we have in front of us, if there is some selling tomorrow, you know, we'll pay attention to the anti-VIX and stuff like that. Look for a tactical entry. You know, that's where the opportunities are. Like I said, anything they sell tomorrow, if it's tech or cyclical, we want to keep an eye on the sweeper activity, because it more than likely will be an opportunity. And until we get, you know, next week is right around the corner already. So don't fall in love. Yeah, they're buying every dip, Stephen, around. Any little dip there is, they buy it up like it's all right. I appreciate it, Mason. I'm about out of my voice now, so I'm going to get going. All right. Should be an exciting morning tomorrow. Don't forget, 8:30 pre-market. So set that alarm clock. I'll see you guys tomorrow. Good luck. Enjoy the night.